First quarter of 2023 has been brutal for the banking sector, particularly for the mid-sized banks like the latest First Republic Bank that got gobbled up by the behemoth Chase. What is this signaling for the rest of the year? Let's welcome Andrew Tisdale, financial advisor for Carolinas Wealth Management. So we're kind of in this very odd state of banking and the economy and borrowing and all of these things. You know, the Federal Reserve, another quarter of a point. So when are we going to see things normalize, do you think?
It's just a process. And I believe things are starting to become more and more normalized, but we're feeling the effects of why do banks fail? You know, we have to understand that banking is a business. If I am actually giving loans for 3% and now I'm having to pay 3.5% on my CDs, or I'm actually trying to compete with there's 5%, 5.5% CDs out there, then a lot of my deposits are going to leave.
Sure. And
then I want to have enough so that I can withstand that. And a bank can fail if it doesn't have the deposits ready, and if they're not making the profit. If you're not profitable, you're not able to do business.
Well, taking SVB, for instance, Silicon Valley Bank, I mean, they were really caught asleep at the wheel. They had a board that really wasn't prepared and didn't really watch what was going on. I mean, there were a lot of rumblings ahead of when all the Fed interest rate hikes were going to be taking place. So you would think that someone would say, hey, you know, I think we need to start changing things up and stop, you know, giving away money so cheaply.
Of course, and we have to look at that too from not just business but personal finances. Is, you know, we have to be prepared for things like that, and we have to be able to manage that as well. But you know, a lot of times when we become comfortable, we become apathetic, and if we become apathetic, we lose sight of the big picture. And when you're in a business like that, you not only put your business at risk, but you put other people at risk for something like that.
So what is this doing to people's portfolios?
As we know, if you've looked, there are, you know, some volatility, and the volatility is natural. Anytime the volatility happens, it's because of situations like we're experiencing right now that occur. So what do we do? You know, what would I tell my people to do? Well, a lot of times, and they hear this a lot, let's stay patient. One thing that we always have to remember, there's opportunities in every market. There's always opportunities. So, for example, you know, if you was with First Republic and now that Chase is going out, you know, look at that. If you own First Republic, now you're part of Chase. How can I know that Chase is going to be taken care of? Things like that. But
too big to fail?
Too big to fail. They are pretty big, and
they're the biggest.
They are the biggest, and them, Bank of America, a couple other big banks, Wells Fargo, they're the ones that said, hey, we want to vie for this, just like First Charter did for the Silicon Valley Bank. So they have the ability and the resources to invest in something like that, just like Warren Buffett would do. He takes those businesses that are struggling and he brings them up.
How do you eliminate risk?
Good question, because that's what a really good investor is going to do. Really good investors know how to eliminate as much risk as possible with the understanding there's always some risk. So how do I eliminate risk? If I'm putting my money in a bank, I want to make sure that I know I'm under that FDIC, $250,000. If you have a joint account, that's $500,000. What about eliminating risk in the market? Diversification. When the financial sectors fail, there's always some other industry that's going to take its place. So I want to have things in the health industry. I want to have things in the financial industry, technology industry, industrial industry.
Kind of hedging your bets there, right?
Exactly.
Hey, I'm learning so much. I am,
Has Karen been here a lot?
What was that?
Karen's been here a lot.
Yeah, she has. She's a wonderful teacher.
She
is a great teacher. Karen Kavanaugh, she's a great guest of ours. But it's true. So you want to hedge your bets. You want to make sure that you have a diversified portfolio, you're saying, so that while one may be struggling, you've got other things that are coming up. For people who want more information on how to find you, where should they go?
Just look on carolinaswealthmanagement.com. You can look it on Facebook. You can look it on the website. Just take a look at right there. We have a great team that's involved, and they will guide you in the way to go.
In 2 seconds, are interest rates going up anymore?
You put me on the spot. I'll tell you what they said in 2 seconds. They indicated they're going to pause.
They're going to pause. They're going to pause, people.
They indicated.
All right. Job market's still strong. They're going to pause. Let's hope for the best. We're back after this.